Serene Education with the 4 majors and that's update for the 9th of April 2013. Morning, guys. Hope you had a great day yesterday. Let's have a look and see what happened on the 4 majors, starting with the euro against US dollar. Yesterday, daily candle edging slightly higher than the 1300, closing higher than 1300, and today, very surprisingly, a lot of upside movement. Start of the Asian session, however, pulling back during the course of the evening. Let's have a look at the intraday chart just to see that. So, start. What do we have? Yeah, moving higher. Very interesting. After Tokyo Open this morning, we saw price moving up on the 4-hour candle. However, since then, price has pretty much moved back. It's almost pulled back the full range of that 4-hour candle at the 3 a.m. GMT morning open, and subsequently, the most important thing, it's still maintaining above 1300. As I mentioned, as long as it maintains above 1300, then we should still see price moving higher. You can see here, bar this little fake out chart, the major touches, this trend line chart looking strong to the upside. As long as it maintains above 1300, price is looking positive. The moment we get below 1300, then we start to worry. So as it stands at the moment now, I'm just going to go back to that daily just to show you a lot of hesitation here through the latter part of February going into March. Most of the early parts of March, most of the first half of March, price was finding support, and then we broke lower. So getting above that 1300 is a psychological battle in itself. If we get above it and stay above it, you can see the candle, as I mentioned, the longer we get above this 1300, the more likely we're going to start seeing things happening. And you can see that the horizontal line now is price is trading above it. But you can see now for the first time the candle has gone blue. As we maintain further positiveness above 1300, the more likely is we're going to start seeing the sentiments also changing on the upside. So as it stands at the moment now, if it remains above 1300 for the foreseeable future, then we should be looking for potential longs towards that 13,150 mark, which is the prior support and resistance or consolidation area here at the 50-period moving average. Get above that, then we should be heading to those higher highs here at roughly around the 13,500, which is just short of that all-important 13,600 mark that we were at back in January of this, the latter part of January of this year. Just looking at my hourly chart, I've noticed that the RSI has fallen as prices edged up higher on this time frame, and that's the only concern. But as long as it maintains above 1300, I will put an alert below 1300 on the hourly close, just to see if we do see price moving further to the downside and RSI generally falling. Then it tells you there's a bit of concern, because that sentiment that's moving higher, there is no sentiment move with it. So you want to see RSI actually moving with price, and when RSI is moving against price, then it tells you that there's no sentiment in the move, which is not a good sign, especially if we are trading above 1300 in this case, because it is a breakout. So we have a floor here, and these floors. If you look at each one of these floors, are this upside. So I'm going to use it as a yardstick, and as long as price maintains above that, then ultimately what we're seeing is a pullback, and then we like to see, as we head into the European session open, get to see that price moving bouncing higher later on this morning. But if it fails to do that and we see 1300 being broken, then it's telling me straight away that we should be looking for potentially this to be a fake out that we've seen just recently, and I should be looking for intraday targets to the downside, and I'll look towards these areas back towards the institution is near term on my hourly time frame, because that's where we come from. You can see quite clearly before we were trading below the institution breakout, and then the continuation higher up into that 1300. So that'll be a good target if we do ever see price falling back below that 1300 mark. On to cable, good old sterling against US dollar. Let's have a look and see what's been happening on the daily. We saw Friday's candle closing higher, and we were expecting price now to find support above 15,300, because we made all that effort of getting up above it. 15,300, a noticeable support and a major support and resistance level. So when price on Friday actually closed above, and we saw price on the Sunday evening open going into the start of the European session open trading above 15,300, we wanted to see price maintaining those highs. As long as it stayed above that, then it'll be trading not only above a major support and resistance, which goes back a number of years, but also psychologically above the 50-period moving average, which is also looking at near-term positiveness, because it's trading below above the 20 and the 50 as well. However, yesterday's candle pretty much going back, closing below it again, which doesn't really stack up too well with sentiment at the moment now. So if that's the case, then intraday we should be looking potentially at 15,300 now being a concern in terms of a resistance area, and then we should be looking to target the downside again. We know that 15,200 has been a major hurdle for price as we've headed up over the past couple of months, over the past couple of weeks. So 15,200 would be a very legible area to take profit, and which actually is the 20-period moving average. So intraday we can actually target the 15,200. So if we look at our 4-hour time frame, you can see price pretty much really just breaking out and pulling back. So this is almost like some sort of fake out. But now we need to see if 15,300 remains as resistance, and if that's the case, look to see if we can actually target a break of this consolidation support here now at 1525 to target the 15,200, which will be back towards our institution. Get below that, then we'll head towards that 1505 mark, which has been a consolidation area. If I just go back to my daily, just to show you that, a major consolidation area here in the past. So intraday, as long as it maintains below 15,300, look to sell on the break of 15,200 towards 15,200. Sell on the break of 1525 to 15,200, which is a good 50 pips away, and to get close below that, then we should be targeting those all important lows down here at 1505. Onto the US dollar Swiss franc. This particular one, I told you that I wasn't seeing any momentum movement. Price was really procrastinating here above the 940 after we made this huge effort of getting above it, which was a positive signal in itself. You can see everything on our weekly time frame was telling us we should be looking for buying sentiment. However, it just didn't want to break these consolidation highs that we saw after the breakout, and that just really showed that RSI as well. When I plotted the RSI now, I was looking for signs to see the RSI moving with price, because that tells me that sentiment's behind the move, or the breakout in this case, and then we should still be looking for upside. However, it wasn't doing that. We could see quite clearly price reattempting a prior high here. However, the RSI definitely dropped, which is not a good sign. And subsequently, what happened was price just fell over. Headed back towards the 940, and in doing so on Friday, breaking and punching through it with that negativity on the non-farm payroll figures. Now we're trading below, and as I mentioned, we like to see price trading below 930, because we get below the 930, then we're into cleaner air. At the moment now, we're in a consolidated range here. You can quite clearly see prices has consolidated in this range before. But you can see that the 50-period, the RSI is still trading flat at the 50% line. But we've got two parts to our 4-part strategy in our favor. We have a red arrow and the red candles. However, I feel if we get below 930, then we're going to see everything else starting to turn red in terms of the sentiment. So indecision candles. Yesterday was an indecisive candle, a very small trading range at the 50% line, 50-period moving average, which has been support over the past couple of days. So it's imperative, if we don't see price breaking below that 930 in the 50-period moving average, then there's more likely to be some sort of support. And if that's the case, then near term we're going to see an aggressive move back up to the underside of 940, which is now the institution resistance. Before it was support, now it's resistance. So it's not a good sign at the moment now for the US dollar against the Swiss franc. We could see potential for consolidation before we see a break to the downside. You can be very aggressive and trade intraday into the 940. It's very aggressive because it is quite close, and it's against the market trend at the moment. However, what you could do is put an alert at 930, the close below 930, primarily on a daily, would then subsequently tell us we should be looking for negativity long term. And then what we can do for the remainder of this week is target that 910 mark, which is where price has been to in the past and consolidated. Just gone to my hourly chart as I use my entry. You can see that 940 is above, and you can see after price hit into the 930, we spent most of yesterday finding resistance at 936. So straight away, and this dotted line over here was plotted on a fib retracement area, so you can quite clearly see how fibs actually come into play, how they really work with price. And over the past couple of days, you can see resistance at the top side. So the more it finds resistance here at 936, the more likely price is just going to end up just going to grab it by the horns and just going to force it lower. The institution's above price. You can see there's a lot more red on either side, which tells me I should be looking for negative sentiment. It's still in play. And as long as we're trading below that 940 above, below the institution on most of the time frames, I should be looking for that negative sentiment. So look for a nice bearish engulfing candle here. Failure at 936, then we could target near term very aggressively towards that 930 mark, which happens to be a major support and resistance level. Get below that, then we could target the all important 910 as I mentioned earlier. Last pair of the day is US dollar Japanese yen. This one of you has seen the most movement. I've got a monthly chart. You can see the yen has really struggled against most of its currency pairs, and the Bank of Japan has now reiterated that it's going to go on a massive spending spree, pumping a quantitative easing times 10. Really going to go and get every single one of their printing presses out, and they're going to print billions and millions and billions and pump it into the market out there to try and get liquidity and subsequently what it's done now is it's seen the yen drop in value. However, it's seen a lot of liquidity for its counter pairs, or any pairs against it. So it's all its crosses have done really, really well against it, including the US dollar, the US dollar. And you can see on the daily, after last week's announcement, you can see quite clearly Thursday, huge bullish engulfing candle, moving above that 940. Now 940 on a daily was our weekly, monthly. It's the February tracement, the 38 February tracement from the 2007 highs to the 2011, 2012 lows. So we saw the 23.6 here, the 87 being broken, and then price headed into the 9400, which was the 38.2. Pretty much went sideways for a long period of time, then broke out, then we saw the pullback, and we wanted to see that price building on that breakout pullback and then the continuation higher towards the 100. That failed to happen, and it procrastinated for a while, broke lower, but it didn't really follow through to the downside. And then we saw the Bank of Japan saying, hey, heads up, cap, enough's enough, we want to start with quantitative easing, and bang, the US dollar really rose on that news. And then subsequently heading into the prior highs at 96.50. Break of 96.50 has then told us straight away that we should have been looking towards that 100. The 100 being the 50% line, February tracement of those, the 2007 high and the 2011 low on the February tracement. That is the 50% line. As you can quite clearly see, as we head into the 100 now, people are going to be well aware to take profit. And what are we seeing now? Profit taking. If you look at the 4-hour chart, you can see we've headed high into it, but however, they don't want to be carrying any risk going into 100, because you end up potentially looking to lose some of the that's profit that you initially set out to get, because people start taking profit at these major support and resistance levels. In this case, 100, which is our 50% retracement of our monthly high and low. So not getting to that 100, actually stalling at 95, the 99.50 mark, and now you can quite clearly see that. So for the foreseeable future, if this is to maintain positive long term for the US dollar against the yen, we do need to see 100 being breached. At the moment now, we're in a consolidated range because people are taking profit as we head into this major psychological support and resistance level. We did the same thing here as we head into 94. I can only show you that on the daily. You can quite clearly see as we headed into that, we started to see selling before we headed into 94. Then reattempt to 94, and it went sideways for a long period of time as there was no momentum. We did get a break of it back in early February. However, that momentum didn't really stack up with it, and we saw price heading back down again. But it wanted to end up making another move, and eventually did break it, but it didn't follow through. However, recently, because of the Bank of Japan going into quantitative easing, we've seen the US dollar rally on that. Same thing over here now. And as we head into a major support and resistance level high, we're going to start seeing profit taking. And how long the profit taking? That depends. It could be a couple of days, it could be a couple of hours. We don't know that. But until such time as we see price really getting above 100, there is not going to be any buying opportunities, because you could be buying into selling potential. Okay, so rather wait for a break above 100, telling us that the sentiment is still genuinely looking for upside, and then we can move further on this particular pair. Okay, so my hourly chart, you can see the pullbacks. Price is now trading at the prior support and resistance level, intraday highs. As long as it maintains above that at the 90 mark, then we could look at it as potentially a positive signal in terms of it's just taking a bit of a pullback. It's taking a bit of profit. If it finds support here, we're going to see price reattempting the 100 mark, which is not too far off from where we are now. There we go. I'll make a note of it so I know exactly where it is. So if we see price finding consolidation here at 90, then look to see if we could see price reattempting the 95 or the 100 later on today or sometime this week. Okay, so that's it, guys. Short and sweet, to the point. Hope you have a fantastic trading day today. Please look at any news announcements to see if there's anything out there that's going to really move the market. Other than that, keep it simple. Follow, back it up, anything that you do with strong money management figures. We know we're in a very volatile market at the moment now, so it's imperative that you actually back up any you're trading with strong money management and enjoy it. Okay, one thing, keep it simple, look for the market moves and let that dictate. Other than that, have a fantastic trading day, and I'll see you tomorrow morning. Until then, you guys trade serenely.